Welcome everybody to another episode of the People's Real Estate Podcast. How are you doing, man?
Hey, I'm doing good. Thank you for having me. Thank you, Renee.
Claro,
Yeah.
man. Gracias por venir, Roberto.
So for the people at home, introduce yourself, talk a little bit about yourself, how long you've been doing this, just give us your background story.
All right, good deal. So I started in the mortgage industry in a weird way. Let me say that.
Mm-hmm.
It wasn't planned. I didn't, just jump into, I'm going to be a lender today. So I'm original from El Salvador. And when I came to the States, obviously, I wanted to succeed. I wanted to find a way to be able to help, but also to be able to be successful in the industry, whichever industry I decided to go into.
Okay.
So my first thought was, I'm going to be a lawyer. I'm going to be an attorney that's going to help people. I'm either going to go into, as a defense attorney, or I'm going to be an immigration attorney. Some way to be able to
just help the community.
I think that every single one of us that does anything comes from experience, right?
Yeah.
So in my younger version of me, I experienced being on the side of seeing my parents struggle with immigration and how tough it was, and how my dad had to be at a job for a certain amount of time to be able to give us papers,
Mm-hmm.
So it was tough. It was tough seeing that, because it was a tough job, and it was a job that didn't pay well. He could have gone somewhere else and got better pay, but he didn't, because he wanted to give the opportunity to me and my siblings, to be able to come to the States, right? And, as we struggle through that, my thought was, man, I wish I could make it easier by being an attorney, right? And I was like, okay, boom. I want to be an attorney. I'm going to do good in school. I'm going to get a scholarship. I'm going to go to college. I'm going to do whatever it takes. And at the same time, I struggle seeing friends of the family going through issues with getting pulled over and not having papers, and needing an attorney that would really defend them, not just throw them
Take their money and
run.
not really do their job.
Right, exactly. So all those experiences build up, right? And you come with a plan, a game plan, if you may, to what you're going to be. Fast forward, finish high school. I get a scholarship. A soccer scholarship to go to Frostburg University. I'm there the first year. I'll screw it. I do an internship at a mortgage company the summer right after my first year in college. And I loved it. I fell in love with the industry. Okay. And went back to college. And this was what I was telling Renee. I went back to college, and I began to do numbers. I was like, how much is it going to cost me for me to be an attorney? How long is it going to be before I get paid?
Yeah.
So you begin to go through the motions, right? And like, okay. Then I was like, I need to be without a paycheck for 10 years. And that's when really, it dawned on me. I was like, I cannot afford this.
Yeah.
Because I had to do the 4 years, then 4 years of law school, then 2 years, for my bar exam and everything. So I was like, no,
Yeah.
I can't.
It's a lot of school that you have to. It's just similar to like people who go into the medical field, right? They have to go through so much, and then they have to go do like a certain amount of years under like a internship or whatever they call it.
Yeah,
before
residency.
Residency, and then it's a long. What I tell people that when they say, hey, when I ask them, what do you want to do, or what are you studying for? That when they say medical or like lawyer, I'm like, you must really love that, because the path to really become a lawyer, a doctor, things of that nature, it's insane. And if you gotta have like a burning passion, or you really gotta have a strong why to do it.
It's a calling, I think.
Yeah.
I think
you're right. That's a good way to say it.
But something key that Roberto said, which is the opposite of my story, which was I looked at school and I was like, not for me, right?
Right.
Roberto was willing to do it.
Yeah.
It was just more, you heard what he said, it's how could I go without an income, basically, for these 10 years that I'm going to be in school to try to be this professional, right? So that's so that's just interesting. I mean, so I guess if let's say if financially you could have pulled it off, you had it in you to that's what you wanted to do.
It's just that
Absolutely.
the numbers didn't make sense.
Absolutely. I think that, in a different life, and this is what I tell my kids, right? So I'm also a father of 4 kids. And the goal is to make sure that the next generation after us and the generation after them is better off than we were, right?
That's amazing.
So
I say the same thing.
I was telling them.
I say the same thing.
We were just talking about. I was telling them. I
Yeah.
was like, people don't have that no more.
Yeah.
They don't think like that anymore.
You know,
most people.
right? And it's fun because like sometimes I'll have a conversation with my mom. My mom's very religious, very devoted to God.
Same here.
And so now she has the ability to do that because she's got kids that can do what she did for us. You know what I mean?
Yeah.
So, you know, I always tell her, you know, when we were growing up, you sacrificed, you had 2 jobs, you know, you did what you had to do, spend as little as possible so that you make sure that we were okay. So now it's our turn. You know, she's got 4 kids as well. I'm the oldest of the 4. And now it's our time to make sure that she's taken care of. She can be at church every day if she wants to, you know, if that's what she chooses to.
Yeah.
You know, and that's part of giving back. I mean, that's the first step of giving back, you know, from my point of view, right?
Yeah, I mean,
so
sticking to like, you know, it's funny that you mentioned that your mom's religious. In the Bible, it says the best thing is to how do you receive is by giving, you know, and you know, that's very important. Like, you know, that you grew up with those principles. Like I'm pretty sure your mother raised you that way,
right?
And it's good. I feel like it's healthy for somebody to grow up with those values in the household, you know.
Absolutely. I think that it doesn't also, it builds you and it gives you foresight of the things that you want to do, you know.
Yeah.
And so as we begin to do that, right? So if I had the opportunity, I would have loved to be able to become a lawyer. You know, I would be Roberto Aleman, attorney at law at this point.
The Aleman team.
Exactly. My Aleman team would be a different type of, you know, the team, you know, I think that it's always been something that's driven me. Okay. I think you only measure success in what makes you happy as when it comes to work, right?
Yeah.
So if you're happy with what you do and you're able to pay the bills and you're able to support the lifestyle and you're able to support your kids and family and whatnot, I think that's what makes you successful.
Yeah.
It's not necessarily having, you know, a ton of money in the bank.
Yeah, I agree.
Because you could be miserable with a ton of money in the bank.
Yeah.
But when you have family and when you build that, I think that's what I measure success by.
Yeah, that's really well said.
Yeah, I had a client that I helped them sell a home. We sat down, right? And he tells me, look, my dream, he's like, you know, my dream is to retire to a farm in Georgia and raise, I forget the type of dogs, man. It's African something, but they're like Mastiffs. They're big dogs. And that was his dream and he did it. And I'm like, that's success right there. Like he achieved it. Like that's just for him, that's success because that's what he envisioned for himself in his life, and he achieved it, bro.
Yeah.
So I it's relative, you know, like what you were saying. It's relative. Man.
I think the and correct me if I'm wrong. The people who give a response like you did, and like the person that you're talking about is the people who have actually achieved, like they've gone through that path of like, because if you ask somebody that's up and coming, like they're grinding right now. Yeah. They're gonna say, if you ask them what is your definition of success or what is your definition of happiness?
Millions in the bank.
Millions in the bank, right?
Yeah.
And the difference is, you know, with him or with somebody like you're talking about, they've already, or what would you say, they're already at the finish line. They've been through the journey and they've seen that money, a large sum of money, doesn't necessarily mean success or happiness.
Yeah, exactly.
It's more of like, you know, finding purpose, fulfillment, fulfillment, exactly. Yeah. So that's very good.
That's awesome.
Yeah.
Man. So all right. So you go back to college. You do the pros and cons, and you're like, you know what? I could actually achieve what I want. I could help people and put some money in my pocket relatively quicker than being an attorney, right? And that's how you kind of like outweighed your options with the lending and stuff like that.
I mean, I had to pivot right at that point. I was like, okay, I know I cannot.
Reality set in.
Follow the path that I had envisioned. I can't. Physically, I can't.
Yeah.
You know, and when that hits, you only have one choice.
Right.
Okay. What's plan B?
Yeah.
I mean, obviously plan A was to be an attorney and be able to do that so that I can build everything that I envision. but that wasn't a possibility. It was not on the cards. It was just simply not available. So I was like, okay, I really enjoy being a processor. That's how I started in the mortgage industry. I began as a junior processor, and my goal was to learn it. Okay, and that summer, I love reading with purpose. Okay, I don't just read for read. Yeah.
There's a difference. Yeah, there's a difference.
There really is.
Yeah.
So what I did was, I went back on the break and I told the manager for the branch. I said, "Hey, I'm really interested in learning how to process. What could I do?" He gave me a stack of papers like this big. He said, "Here are the guidelines for FHA. FHA is one of the loan programs for first-time buyers that is very flexible." He said, "This is what you want to know. If you know this, everything else will come because it'll be just, do. And the more that you do, the better you get at it, So I read those guidelines, I don't know, 20 times, and they didn't make sense. But I kept reading it because I wasn't understanding what it was that I was reading. I didn't know much about the mortgage industry at that point.
Right.
I was still a kid. I was like 20, 21.
Oh, wow.
So I was a kid,
Yeah.
I mean, I had a very mindset of what I wanted to do, right? So I was like, okay, you know what? I'm going to jump in. I began to read and read. And then he said, "I'm going to give you another thing that you may want." And this institute is no longer around. It was the Capstone Institute.
Okay.
Where you could go and they will give you test cases.
Okay.
They'll be like actual files, fictitious people with actual documents, right? And they'll be like, "Okay, we're going to teach you the process." And that is when things began to make sense.
What was that, like loan school?
Yeah, pretty much. It was loan school. It was like a 3-day thing.
Okay.
The whole days, right? All you did was the first day was an introduction of what loan documents look like and what they are.
Okay.
The second part was loan documents from the borrower and how they make sense and why they are needed. And the third day was, okay, now you need to put it together to present it to a bank so they can approve it. And that's when the guidelines made sense. It wasn't until then that I was like, oh.
You can apply them to real world cases.
Exactly.
Yeah.
I was like, what are ratios? What is an ETI? Why does it matter? And that's when it began to make sense. So I spent 3-4 years doing processing. I went from a junior processor to a senior processor in that time frame. The loan officer that I work for, she's still a good friend of mine. And she'll say, "Hey, here's this file. I took the application. Make me some money. Take it." And I had to figure out how to make her money. One, which meant, playing with the rates, figuring out at that point, we were in a bank, so we were a broker. So what bank am I going to place this with? Where is she going to make the most money at? And where is going to be the best rate for the borrower? So all those things I had to figure out as a processor. I didn't know that wasn't my job.
that wasn't supposed to be part of the job description.
Yeah, I mean, it wasn't.
He's like, this wasn't in the guidelines.
They didn't teach me that at loan school.
So because it wasn't, she was just giving me additional things to do so that I could learn to do things that she was doing.
Okay.
In a way, she was just trying to give you tougher skin, like trying to see like how resourceful you are, like because a person that's put in that situation, you either it's fight or flight.
Sink or swim.
Like
Right. And that's really what it was. I mean, it was her way of saying, "I'm going to teach you how to be a loan officer, and I'm going to teach you how to learn,
do my job, basically."
Pretty much.
Yeah, I hear you.
And that was her process for like I said, 3-4 years.
Okay.
And I learned a ton. And I was like, wow, And then I was like, what's next? Because I entered, but that was not what I wanted to do yet. I was making okay money. So the next thing they were like, okay, be an underwriter. I said, what does that, how does that work? And they were like, well, you're going to be the person approving the loans. I was like, okay, I like that. More power. And so I got certified to be an underwriter and underwrote. And another year went by as an underwriter. And I realized one thing out of, being a processor and being an underwriter. A processor, you still have communication with the borrower. You have to have that one-on-one with the borrower and talk and hear the stories, know what's going on with the borrower. As an underwriter, all you see is docs.
Mm-hmm.
As an underwriter, you're making a decision without knowing the actual person. You're making a decision just solely on the documentation that was presented to you.
You have no context.
No face.
Nothing.
No voice.
No, piece of papers.
Black and
It's
white.
like, okay.
Yeah.
And that's when I realized. That's really when I realized that I wanted to be a loan officer because I wanted to have that interaction. And I guess I go back to my attorney mindset, right?
Mm-hmm.
That I wanted to be an attorney to be able to help people.
Mm-hmm.
As an underwriter, I felt that, hey, I'm here, I'm approving loans, I'm figuring things out, how to make people, get approved, but I'm not really seeing the
No connection.
right.
Yeah.
So I missed that, right?
Mm-hmm.
So I was like, okay. I'm gonna be a loan officer. And my friend who I was processing for her for all those years, she was like, come to SunTrust, because she had left and went to SunTrust, at that point. And but you have to have at least 6 months of savings, because guess what? Being a loan officer, strictly commission.
Yeah.
Just like a real estate agent.
Pretty much. So if you don't take clients to closing, or if you don't have the clients, you can work an entire month and get zero pay.
Mm-hmm.
And that's just the way it is. That scared me. Because by then I already had a family.
Yeah.
I had kids.
Yeah.
And I was like, okay,
It's a big leap.
yeah.
So underwriters and processors, usually they're paid differently. They're not
They're
paid on
salaried.
commission. They're
Oh,
salaried.
salaried.
They're
Okay.
salaried.
And just Roberto, I was just writing some notes here, just for the audience, right? Because loan officers, like you said, they're the ones that have the interaction. They're basically like the face, right? But behind you guys, it's there's a whole process, there's a whole team, right?
Yeah.
And on this podcast, that's what we like to do, kind of give like the behind the scenes, right? So I know this is probably different at every different place, but in general, what's the structure like that a file goes through? So a processor, is that like an assistant? Or is that like break it down, and then how does it go?
What's
and then
the
you get
hierarchy?
to underwrite. Yeah,
Right,
like
right.
the hierarchy. Yeah.
All right. So I'll start you from the moment that I talk to a client.
Okay.
We'll start that.
Okay.
So a client comes in, or a borrower, sends their documents. Most of the clients right now, they fill out an application online. We have an app that, we send to clients. They download them and complete their application. And the good thing and the reason why we like the app, not only because they give us, the history of their employment and everything, but also they get notified every time we do something on the loan. So it's like, the client gets notified. Let's say that they're at work. They're working, doing their thing, right? They finally get off work and they get to the car, they begin to check their phone. If they were going to call me to get an update, they already have 5 messages probably from the app saying, hey, this happened in your file, this happened in your file, this happened in your file. So they have the update, and people still call me. They're like, hey, is this accurate? I'm like, yes, that's the process. That's where we're at. Because we're sending them updates. We tell them what's happening. And as long as they have the app, they'll get the notification on the app. But let's go back to the process, right? So I talk to a client, they complete their application. I review the loan documents, and I issue what's called a pre-approval letter. Okay, a pre-approval letter all it says is that I have reviewed your documentation, I've reviewed your credit, I've run what we call an automated approval system, and they have been approved. Okay, so that's the first step. Okay, the loan doesn't get to a processor, okay, because we don't have a contract yet. Okay, so once we have a contract and we issue what we call loan documents disclosures, my LOA, which is my loan officer assistance, is who will call the client and will finish inputting all the information in the system so we can order the disclosures. And we then either schedule a phone conversation or an in-person meeting with the borrower to go over the terms and conditions at that moment. Because one of the things that change constantly is rates. And so it could have been a month or two before they found a home. So the rate that we originally quoted might have changed. It might have gone up, it might have gone down. It could be still the same. whatever the market does, that's, we have that meeting with the borrower. And once the borrower signs all the documents and gives us updated pay stubs and bank statements, we have to update everything. That's when the file gets moved to the processor. Okay. And the processor, what she does is she makes sure that everything that I put in our system for the underwriter to review is accurate. She goes through pay stubs. She takes a look at my income calculation. She looks at the credit report, an updated credit report. Is there something that I missed that is new, or anything that could derail this? Okay. If not, then they make sure that everything that is supposed to be in the file is in the file, and then the file gets moved to the underwriting department. Then at underwriting, they're going to review the same thing that the processor reviewed, the same thing that I reviewed, and then they'll issue an approval with conditions. What that is you're approved. However, there's some questions that I still have, X, Y, and Z. And as long as X, Y, and Z is met, you can go to closing. Okay. That's what that is.
So it's three. It's basically, like, the way I'm thinking about it is like 3 checkpoints. The loan officer is the entry point, and then the processor is like the first checkpoint or the first thing quality you have control. For quality control, and then the underwriter is the final boss in the way to say it. And that's why I guess last time we had Alvin on, he said a lot of people look at the underwriter as like or he mentioned something about the underwriter, like people look at him like kind of like the bad guy.
Yeah, the underwriter is the bad guy.
Yeah, so because he's, like you said, depending on what he finds, he'll put certain conditions, right? So that's good.
And what's that dynamic, Roberto? Like, is it like you guys are like the government, and you guys are kept in secrecy, and you only have a piece of the puzzle, and you guys can't know the whole thing, or is it like you guys work in tandem together? Like how does that work?
It's like we say in El Salvador, juntos pero no revueltos.
Okay, juntos pero no revueltos.
So me and my processor can look at something and say, you know what, we cannot put this in the file.
Okay.
It might be because it was an old bank statement, and let's say that they were, doing a cuchual, right, or something, and they brought this money and just put it in the bank. Yeah. We don't want to show that, obviously, because then we don't know how to source it, right? Yeah. Because it was, like a community funding type of thing, when you do cuchuales, or
you can't really track the money.
Yeah. Right, exactly. So we don't want to show that to an underwriter, because the moment the underwriter sees it, it's done.
It's a red flag.
It's done. I mean, we cannot go back in it.
Yeah.
All right. So the underwriter is going to say, hey, where does this money come from? And if the money came from, something like that, where, everybody's putting $100, and then, they come together and they're like, okay, it's your turn to have this money, right?
Yeah.
Which is what a cuchual is, right? Other names for cuchual?
Hey, I was
tandas.
Yeah. I was just thinking, is that like a strictly like Latin American thing or Latin?
I'll be honest with you, I don't know that many people that do those, but I have like met some.
Yeah,
it's a common thing, but I guess it's like you gotta know people that do it.
I mean, there's a ton. I mean,
there's a bunch. Yeah.
I know that ton. I mean, that's what I'm telling you.
Pero what I'm saying is, lo hacen los asiáticos, lo hacen los africanos.
Like, yo creo que es más latino.
It's Latino.
Yeah.
All right, audience. Let's challenge the audience. I want to know if in any other culture, Arabic, whatever it is.
What would that translate to? Like,
okay, so let's explain what it is. So basically, it's like a communal pot.
Yeah.
Right? And we all put towards this pot, let's say, like
a set amount,
like $100 each or whatever it is, right? And then based on just the order, I don't know how they do it, but based on the order that everybody's part of this group, it comes that it's your turn now to receive the pot this month. Right? So it's like a way to save.
It's a savings.
It's amazing though.
It's a savings club.
Yeah, it's like a savings club.
But it's like you said, like a communal, right?
Yeah.
So, and what they do is, so you draw numbers. So let's say there's 10 people, right, that come together and say, hey guys, let's get together and let's save, right? So they throw in the numbers of the many people who are going to participate, right? And you draw it. And the number that you draw it is the week that you're going to be able to pull the money for yourself. All right. So once you draw, right, a lot of people like to be last.
Okay.
Because then by the time that they draw, they don't have to pay back in it anymore. They're already done, and then they get whatever's in the pot at that time, right? So let's say that is $200 times 10, right? So that's what the pot is.
$2,000.
Exactly. So that's, I seen it get as big as $10,000.
Yeah, I've seen some crazy ones, man. I've even been part of them.
So my question is it like, okay, everybody's putting in like, let's say $100.
Yeah.
Is there a goal to where it, let's say the goal of the pot is to get $5,000, and when everybody's contributed $5,000, it gets somebody in the group gets the $5,000 and then rinse and repeat, or is it like how does it work?
So the way it works is there's already a max depending on how many people are in. All right. So let's say that 50 people signed up, and the 50 people put in $100. Okay, and it's weekly, mind you.
Yeah,
weekly. So that means that you're putting $100 into that pot every week, and every week, whoever number it's up, that's who take the pot.
Okay.
Okay, so 5,000 this week. Okay, hey, it's my turn. I'm number one. Great. Yeah. Everybody keeps putting their 100, right? Even the one that already drew it, they still gotta keep put the 100 every week. The next week is 2, 3, 4, 5 until everybody
collected.
Exactly.
Okay. Do they all get the same amount?
Yeah.
Exactly.
Yeah. See, the thing is, you're it's capped already, right? Because if we're all evenly putting money in, it'll always be an even amount for everybody.
Is there? I wonder if people like.
The thing is, the reason they fail is because eventually people stop feeding into it after they get paid or whatever. You know what I mean? But if you keep it going, I mean, it's just like savings. It's like you're putting up $400 a month to eventually receive X. You know what I'm saying? But you know, it's not you're not up on anybody, but it's like a way that if you were to do it, the whole point is if you were to do it, you can never put $5,000 together.
Right, discipline.
You see
that's what it is.
Yeah,
pretty much. So imagine this, right? It's no different than you choosing to open a savings account and every week putting that $100, right?
Yeah,
until you get to the 5,000.
Yeah.
Right? Except that when you have a community of people
you get
doing
faster.
it gets faster.
Yeah.
Or
that's dope.
Or you're kind of pressure into having to continue because hey, you started, you better finish. Right?
Yeah, you don't want to let everybody down.
Yeah. Right, exactly.
Yeah,
so
you don't want to be that guy.
Right, exactly. So whoever draws last, he already put that 5,000.
Yeah.
He's just getting them in a lump sum.
That's pretty dope, though.
So please comment below if you guys are watching this and you're not a Hispanic or Latino. Does this or any variation or variant of this exist in your community? I'm just curious.
It's got to be.
I'm just curious. Yeah. I'm just curious what they call it, how they.
A different name, I'm sure.
Yeah. Of course.
Even within the Latin community, we call it different things, right?
Yeah, exactly. Yeah,
because I had never heard the way he said it. I heard
Chuval, I've heard that.
I've heard
Tanda.
Yeah,
I've heard
that's what I've heard.
There's another one, and I cannot think of it.
Yeah.
But the different people, different call, call it different. But yeah, no, it's crazy. So anyway, so going back to the thing, right?
Yeah.
So the underwriter. That's all good. That's what we're here for, right?
So if the underwriter sees this money being deposited, and when they question it, right, they'll be like, "Hey, where does the money come from?" Then we won't be able to say, "Oh, they did a Cuchuval or
yeah, exactly."
And that's what they got the money, and they'll be like, no, because then we have to count your payment into this, right?
Yeah.
So we can't. So long story short, we are the first line of defense on what we want to show, right? So we're gonna make sure that our files are squeaky clean. That if there's anything that could be called for, that we try to foresee it. Not going to happen every time because we don't have access to certain things that the underwriters do. Okay. So I've had issues where a client didn't tell me that they were an owner on a different property. But when the underwriting department run or they call it MERS, and MERS tells us any property that's associated with our client's name. Obviously we don't have access to it because it costs money every time we run it. So we don't want to be running on everybody unless we have to, which means that we're doing our quality control. We're doing everything that we're supposed to, right? And that's just part of the process. So whenever something comes up, we got to go and figure it out. Okay. So I didn't know this. Now I got to deal with it. Or I already knew it. And I done right calling for it. Great, let's go ahead and get it. So there's a lot of things that could happen, and one of the biggest issues that plagues our industry is how an income is perceived. Okay, that's probably the biggest issue in the mortgage industry.
Yeah, that makes sense.
Because we can calculate an income one way, and the underwriter come back and say, you know what, I don't feel comfortable.
I don't see it that way.
I don't feel comfortable doing it that way, because let's say that we have a borrower who did a ton of overtime in 2021, but then he was like, you know what, I want to relax in 2022. I'm just going to do my 80 hours and I'm going to be done. I cannot use that overtime because I don't have a history of it. Yeah. Even though now this year, the client decided, you know what, I'm going to get back to overtime. And I was killing it.
I need to grind it. I need to grind again.
It's not consistent.
Right, exactly. Pattern. So we don't have a history, right? And there's sometimes that we can find, the reasoning behind it. It could have been COVID, for example, right? Mm-hmm. So we had COVID, and we had clients making a ton of overtime before COVID and a ton of overtime after COVID, but nothing during COVID.
Maybe they had to go back to school and recertify or something.
Yeah, I mean, or simply, the companies kept them on board, but they didn't have
the opportunity for
the time, the extra overtime, and that makes sense. Mm-hmm. But now we got to go and document. Yeah. We got to go back to the employer and say, hey, Mr. Employer, I see the borrower did overtime this year and now, but during this year, there was nothing. Hey, the letter from the employer is going to say, we managed to keep our employees at full time, but there was no overtime available because, we were closed for a certain amount of time, or we had less hours, or whatever the case may be. It has to make sense. But in that letter, the employer also has to say, hey, unless another pandemic happens, he's always getting overtime. Yeah. And then now the underwriter has, something to work with, right? Yeah. Now they can say, you know what, this makes sense. Mm-hmm. They are foreseeing that the overtime is going to continue because we had the history before, we had the history after. Mm-hmm. And during that time, it was not the borrower's choice. It was not the employer's choice. It was something that happened. It wasn't just for this community. It wasn't just for this state. It was nationwide. Yeah. So it that's when we begin to make sense of things, right? Mm-hmm. So sometimes we forget that part. Yeah. And a lot of people, they're like, they don't want to deal with the hard stuff like that, mm-hmm. because then you have to do extra work. You have to go the extra mile to make sure that client gets their home that they will qualify for, because we know the story. Is how we present the story. Yeah. So that's what, I think that a lot of people don't understand, that we're storytellers at the end of the day. Mm-hmm. We're telling the story of the client, because when the underwriter receives it, they just see papers, right? Yeah. They don't know, Mrs. Aleman is trying to get a loan and this is what happened. This is the story. But if we tell it right, mm-hmm. and we document it correctly, they'll get their home.
Yeah, because like you said, the underwriter doesn't know these people. He has no context. So he's just looking at straight.
And it kind of works that way, you know what I mean? Because we are emotional creatures. And, exactly. So I think at the end of the day, it should be, because this is what I preach on this podcast, right? These people, the audience, got to look at it like, you got to understand, all these people are trying to do is mitigate risk, mm-hmm. right? So at the end of the day, the way they look at your file is, how much risk am I taking on, right? And this is the thing. After the underwriter, we say that's the boss. No, the real boss is the investor, right? Mm-hmm. You know what I mean? Because that's who the underwriter and everyone's working for, is for this investor, right? Investor, group of investors, whoever it is that's dishing the underwriter is not dishing out the money. Bank. You know what I mean? Bank, investor, whatever you want to say, right? And they're the ones, and the underwriter is there to kind of minimize the risk and be able to, like you said, storytell and basically sell this file to an investor, right? At the end of the day, that's kind of like the inner workings of a loan,
Exactly. And that's the one thing that a lot of people don't understand, mm-hmm. is that the underwriter is underwriting to the risk. What are the chances that this client's not going to make my payment? Mm-hmm. That's really what the underwriter is looking for.
Yeah.
So we just got to give the underwriter enough information to let the underwriter know that, hey, this client has been making rent payments equal to the mortgage for the past 10 years. Mm-hmm. There you go, yeah. Why wouldn't they make the payments on this home? So we document it right. But like Rene said, it's all about risk, right? Yeah. And the one thing that a lot of people don't explain is how and why rates are different from client to client. Mm-hmm. And it boils down to risk.
Risk, yeah.
Exactly. So credit scores tell a little bit of the story of a credit report. And I say a little bit because I've seen credit reports where the client has never had a late payment, but the credit score is low. And that's only because, unfortunately, they got themselves into debt, and the debt is bringing their credit score down, even though the credit report has
flawless history.
Excellent, exactly. They've never been late, right? And unfortunately, even though their credit is excellent as far as payment goes, their credit score reflects their inability to maintain a low balance versus their credit limit ratio. Okay, so when that happens, your credit score is going to be lower, and that's when rates get affected, because not only do they want to make sure that you can make the payment, but based on the credit score, they will assign an interest rate. Okay, so some clients, with 740 credit score, which is cream of the crop, right? They might get, let's say, 6 3/4 interest rate. Okay, and a client with 680 may get a 7 or 7 1/8% interest rate. And clients with a 640 credit score, so as we go lower, right? That credit rating goes lower, the interest rate is going to go up. And that's just the way it is. Unfortunately, people sometimes they don't understand what is the reason that my interest rate is higher than my cousin who just bought a house, and he got X. But what I always tell clients is, each loan is designed to fit them, and what fit this client is not going to fit this other client. It's like making a dress for this lady and trying to fit it on this lady. It's not going to work.
It's not a one size fits all.
Exactly. Or let's say that this guy who's really well qualified, we got them a really nice suit, and this client was the same suit, but he's not that well qualified. We're not going to be able to do the same thing. It's going to be different.
Pero a mi primo le salió bien barata la casa, Roberto. ¿Y a mí por qué me está saliendo tan caro a mí, hombre?
Eso es lo que me dicen los clientes. Es donde yo les explico, ¿verdad? Hey, así es como las cosas son. Pero ¿sabes qué? Yo creo que es importante eso. Tomarse el tiempo de explicarle las cosas a los clientes con detalles. Porque si no les explicamos nosotros que somos los profesionales, entonces lo va a explicar a alguien que no lo sabe.
That's facts.
That's facts. Yeah, that is so true.
So, that's what's happening, especially everywhere now with social media and stuff. Everybody's an expert. Todos somos expertos. No,
oh my goodness. Another thing that I'm seeing a lot too is like, just because, social media that you say, like, there's people on there that are real estate agents or might not be, who knows, you know, and then people who are active, like, on social media, a lot of clients or people interested in buying real estate, they might look at, people always giving out tips. They're like, they might give tips, but they're just taking it at face value, like, oh, this is
the truth.
And then they go meet with an actual professional or somebody that really knows the market or knows the area, and they're like, hey, but they're trying to tell them what to do, and they're like, no, this is what it is. No, but I saw this on social media. Like, no, it's a whole
lot of misinformation.
You gotta know you gotta be able to filter what's true and what's not.
So I want to dive just for a second, man, because I feel like this is es un problema, and I'll go back and forth in Spanish and English. So credit. Okay, what you just said there, that's like some insight, man. It's like there's like finicky details, because he's telling you, hey, even though this person pays all their bills on time and has been doing it for 10 years, maybe it's just, they just can't get out of that debt, you know what I mean? But they make their payments, though. They're on time. These people pay, right? And then the other person that perhaps doesn't even have that long of a credit score, but they've also paid or whatever, but they have a higher credit score. You see what I'm saying? And this is the thing, like, where the thresholds, right, of where's this credit score. And this is what I want to tell. My whole point is to say this. Remember, you're not financing a vehicle or like furniture. It's a home. It's a mortgage, and it's for 30 years, right? So my thing is this: let's say you're at a 680 credit score, right? Like Roberto was saying, right? And let's say that my point is, talk to your loan officer and say, okay, I have a 680 credit score. Roberto, what would happen? What does my payment look like if I had a 740 credit score, right? Because 60 points on your credit, that's not easy sometimes, right? Like, sometimes you're at 680 and that's a good credit score, but to jump to 740, like, man, and you're on time, everything's good. Like, it's not, you know, if you're a person that's in good standing, you're not just going to jump 60 points is what I'm trying to say, right? It's going to take more work. It might take more debt and you to pay off that debt so you can, you know, increase your credit score sometimes, right? So what I'm trying to say is analyze it. Say, hey, Roberto, what's my payment? What does this whole situation look like at 640? What does it look like right now at 680? And compare it. You'll find that because you're financing something over 30 years, it's not a big difference, man. You know what I mean? Sometimes if you have a really subpar score, then yeah, right? So that's all I'm trying to say. Sometimes what I'm trying to say, it's sometimes going to be easier to pay that $80 a month, you know what I mean, extra that you would pay if you had the 7 credit score, because it's going to be a lot harder to attain that 80 point or 60 point, you know, increase in credit score, right? And credit is something that you could fix on, you know, as you go on, right? You can work on it. But what I'm saying is don't miss out on the opportunity of owning a home just because you heard online that you need a 720 or 740 credit score, when maybe it's $100 difference. Now, over 30 years, yes, it's going to be a lot of money, right? But, you know, statistically, like we say, people always refinance or sell their home within the first 7 years of ownership.
It's right? More like if you want to get the best rate, you got to.
Yeah, I want to get the best.
You want to aim for the best credit score.
So let me chime in really quick.
Yeah, of course.
So it's so funny that you say that, because most people, they're looking for rate.
Exactly. Okay. Yeah, that's why I say that.
But I always tell my clients, the rate is what the market drives, and what your credit score, you know, let us give you based on what the market is doing. But what you really should focus on is on your payment.
That's it.
Can you afford this payment? Now, I understand we all want the 3.25% interest rates.
Yeah, you know, of course.
To come back.
Yeah.
Are they? Not in anytime soon.
Not
if they ever do.
Yeah.
Okay.
Yeah, that's what we talked about. That was historic.
That's matter of fact, right?
Yeah.
So I'll go statistically speaking for a second, right? So, like you said, statistically speaking, anybody who purchases a home for the first time, they will either sell or refinance within the first 5 years.
Yeah.
Yes.
Okay. So, if your payment is $100 higher than what you would want to be, okay, maybe in 3 years, maybe in 4 or 5 years, rates will drop significantly enough to where it will make sense for you to refinance into a better rate and drop the $100. Now, mind you, a couple of things are going to happen in those 3-5 years, right? Your credit score could be higher. Okay. Your home is going to gain a ton of value. Okay. And we may start you with an FHA loan where you're paying mortgage insurance. Okay. And maybe your mortgage insurance is $150. And maybe right now you're getting in at a 7% interest rate. And your payment is $100 higher than you would want to be. And let's say in 2 years, rates drop to 5.5. 5.5 versus 7% is going to save you about $250. Plus
dropping the
mortgage insurance of $150. And maybe at that time you choose not to have a lower payment, but a lower term.
There we go.
So that's when you begin to really drive in, okay, what is it that I'm trying to accomplish? Am I going to keep this home long term? Am I going to sell this home? And if I'm going to sell this home, is it smart for me to refinance and lower my payment, but spend X amount of money to refinance? Because a refinance is going to cost you anywhere from $4,000 to $5,000. Hands down, that's what's going to cost to be able to refinance. If you're saving $100 a month to save $5,000, to spend $5,000, and then you're going to sell in a year, it's not worth it. Because you're going to spend more money and you're going to save less. You know, but if your plan is to stay here 10 years, then you'll recover that in 3 years.
Yeah.
You know, so that's those are the things that we got to look at, you know?
Yeah.
So then we begin to kind of, okay, what is your goal with this home? Okay. Are you okay with this payment right now? If you're okay with the payment, then move forward. Don't wait for a lower rate, because you may be waiting to save $25-$40 on a 0.25% interest rate. And you don't know if that rate's going to go up.
Yeah.
Because that's what we've seen. I mean,
yo lo que le digo a la gente, ahorita está difícil. Ahorita, si quieres una buena casa, una buena área, algo bonito, le van a llegar 5 ofertas. Y ese con el interés al 7. Y la gente dice, no, pero está muy... voy a esperar que baje el interés. Brother, pero cuando baje el interés, hey, ahora ya no van a ser 5 ofertas, ahora van a ser 20 ofertas por esa casa.
Competition.
¿Me entiendes? Entonces, ahora lo que tú estabas pensando, me voy a ahorrar dinero. No, porque ahora vas a comprar la casa más cara. Si es que la conseguís, ¿me entiendes? Porque para ganarle a las otras 19 ofertas, tenés que darle para arriba, papá. ¿Me entiendes? Entonces, eso es lo que yo le entiendo a la gente. Claro, yo quiero todo más barato también. We all do, right? Pero en esta clase de mercado, yo le digo a la gente, como dice Roberto, enfóquese en el pago, ¿me entiendes? Puede salir con ese pago, porque si ahorita pueden salir adelante con ese pago, hey, en un futuro, Dios quiera, ¿me entiendes? Y bajen los intereses, se van a reír de la vida, brother, ¿me entiendes? Se van a reír de la vida porque ese pago les va a bajar significativamente a más, ¿me entiendes?
Tengo una historia. Lo voy a hacer en español. ¿Okay?
Dale, pues.
Okay. So, ayer me reuní con unos clientes. Y clientes que se han hecho amigos.
Okay.
Okay.
The best.
Entonces, vienen a mi casa, tú sabes, y queríamos conversar. Y me dicen, queremos comprar otra casa.
Okay.
I'm like, okay.
Aquí está la tarjeta de René, les dijo Roberto.
Exactamente. Entonces les digo, hablemos de la calificación.
Yeah.
Y entonces me dicen, tenemos $30,000. Hemos ahorrado $30,000.
Nice.
Okay, I was like, okay. ¿Cómo estamos con el crédito? You know, porque I remember todos los detalles de ese caso, ¿no? Entonces, y me dicen, bueno, hemos ahorrado porque hemos gastado una tarjeta de crédito. Okay.
Lógico.
Okay, entonces le digo yo, okay, so that means that your credit score is probably lower. And so we're like, okay, so we move forward and, you know, I proceed to check the credit. And sure enough. So le digo, tienen dos opciones. Si quieren comprarse otra casa, podemos pagar deudas y esperarnos un año, porque se van a tardar como un año en pagar todas las deudas que han adquirido. Le hace falta año y medio para terminar de pagar uno de los autos. Entonces les digo yo, bueno, al salir ese auto también les va a ayudar a su puntaje de crédito y nos va a ayudar a calificar a lo que ustedes quieren calificar. Pero hablemos de pago mensual. So, siempre llego ahí al pago mensual.
Pago mensual, es la clave.
Ellos están pagando porque ellos compraron cuando las casas estaban a 3.25, las tasas de interés. Una townhouse. Y ahora la casa vale el doble, el townhouse, de lo que ellos compraron. Y el pago mensual de ese townhouse no se va a comprar a un pago mensual ahorita.
Claro.
Entonces les digo yo, basado en lo que ustedes quieren comprar, este sería el pago mensual. Están bien con ese pago mensual.
Shook.
Ya, se fueron para atrás.
Yeah, they paid 3.25 or whatever the rate was. Yeah, of course. Yeah. Claro que sí.
They're paying like como 1,300.
Claro. Wow.
That's like finding a unicorn.
No,
Exactly.
No hay, esos mortgages ya no existen.
Right. And they're like, ¿cuánto me va a costar? ¿De verdad? ¿2,800? I was like, yeah. Y eso es asumiendo que pongan el 5% de down payment porque ya tienen una casa y hay que facturar lo que se va a poner en la siguiente. O pueden vender la casa y de la ganancia que tienen en esa casa, apliquémoslo para la compra y así reducen lo que va a ser el pago mensual. Okay. That makes a little bit more sense. But they don't want to sell that.
Yeah, of course not.
You know, because, you know, they could rent that house and be making...
Cash flow it.
Yeah, absolutely. $500-600 easy.
Yeah.
If not more.
Yeah.
You know, for just renting it. But now, you know, that I put that little seed of what they can do, right? So now they're like, okay, they're thinking 3 and 4 steps ahead now. Now they got to figure out how to do everything that I told them.
Yeah.
You know, and not spend all the $30,000 that we saved.
Yeah.
Because they could easily, you know, wipe it out and have nothing.
Yeah. It's like they got to weigh their options. It doesn't make sense.
No, y esa es la importancia de ver con un profesional, porque nosotros, bueno, Roberto, he sees it de todas diferentes maneras, ¿me entiendes? Uno a veces solo está viendo la situación de uno, como el caballo que va en la carrera, right?
Correcto.
Solo puede ver lo que está adelante y lo que uno quiere lograr, pero a veces un profesional te puede decir, te va a llevar al mismo destino, ¿verdad? Pero te va a llevar ahí mejor porque ya sabe el camino, ¿me entiendes? Entonces, eso es lo que decimos siempre, de hablar con un profesional. Y lo que estábamos hablando anteriormente, que solo lo dije en inglés, es lo de el credit score, ¿verdad? El puntaje de crédito, que a veces las personas escuchan online o por TikTok o whatever, que se tiene que tener cierto puntaje para recibir el mejor interés. Cierto. cierto. Pero eso no quiere decir que usted no pueda comprar su casa, que le convenga a uno tampoco, ¿me entiende? Solo porque usted tiene tal vez un 680, un 660. Es de analizar y ver la situación que tiene esta persona y qué es lo, como dijo, la importancia que dijo Roberto, cuál es la motivación y qué es lo que quieren lograr, ¿me entiendes? ¿Es a largo plazo, es a corto plazo? Porque a veces el cliente está pensando, oh no, tengo que llegar a un 720, ¿me entiendes? De estos 660 que yo tengo. Y lo que yo estaba diciendo es que subir esos 60 puntos a veces es casi imposible. La única manera es metiéndose a más deuda y comprobando que uno puede salir de esa deuda y ahí le va a subir el puntaje de nuevo, pero eso toma tiempo. Entonces yo lo que les quiero decir es que en vez de darse por vencidos y escuchar a veces lo que la gente dice, que la verdad no son profesionales y no le han revisado su situación individual, que hagan eso. Y el profesional le puede decir, mire, si no quiere comprar ahorita y quiere lograr comprar con este puntaje, bueno, esto, así le quedaría. Y ahí es donde ustedes se van a fijar, que era mi punto, que a veces no es mucha la diferencia, porque lo que quieren financiar es por 30 años, brother. ¿Me entienden? Entonces esos pagos mensuales no va a hacer mucho la diferencia entre, digamos, un 740 y un 680. Sí va a haber una diferencia y claro, va a ser buena a la larga. Pero como dijo Roberto, estadísticamente las personas que compran casa o refinancian o venden en los primeros 5 a 7 años, ¿verdad? Entonces ese era el punto, que revisen la situación y vean las diferentes opciones que tienen y no se den por vencidos ustedes mismos, ¿verdad? Que hablen con un profesional que les puede aconsejar y asesorar.
Exacto. Y otra cosa que comentamos hace un rato fue que muchas veces vemos la información que está en TikTok o en redes sociales, pero muchas veces esa información aplica y sí existen, porque te voy a contar de que el otro día vino un cliente a mi oficina y me dice, mire, escuché que hay $50,000 de ayuda para comprar por primera vez. Entonces le digo yo, no he escuchado ese programa aquí local, pero sí sé que hay.
Yo he escuchado cosas así.
Entonces, y me dice, mira, aquí está. Okay.
Shows you TikTok.
Es hasta $50,000.
No, pero es que en California
Okay.
hay un programa que se llama Cali FA.
Okay.
It's a local.
Sí, es algo local. Entonces, ese programa, pero vamos a comparar California con Maryland.
That market
que una casa de 2 cuartos ya te cuesta $600,000.
Claro.
¿verdad?
More than $500,000.
Y hay que renovarla.
Sí, hay que renovarla. Entonces, para motivar a los clientes a que compren, los condados ahí en California les dan hasta $50,000 a los clientes para que puedan hacer la compra para su down payment y los gastos de cierre. Lógico, estamos hablando los precios, y ellos son para first time home buyers, los precios, casas pequeñas, las que uno empieza, ¿no? En 500, 600 mil pesos. Entonces, es diferente. Entonces, en Maryland existen programas. ¿Okay? Lo importante es, vamos a poder calificar para esos programas. ¿Okay? Porque la mayoría de los programas para asistencias para el down payment tienen sus propias regulaciones. Es como que vayas a querer ordenar un sándwich, ¿ok? Vamos a decir a Ruby Tuesdays, que te venden en McDonald's. O sea,
no es la misma calidad.
No es la misma calidad. No existen a veces. Tú quieres un chicken sandwich de McDonald's y vas a Ruby Tuesday, like, güey, no existe esto acá. Okay. Entonces, las reglas son así, son día y noche.
Claro.
Entonces, una regla para comprar una propiedad con el programa de Maryland, por ejemplo, dice que tienes que tener X monto de deudas versus ingresos. Cuando si tú haces un préstamo donde tú pones tu propio down payment, es más flexible. Okay. Entonces, Maryland no te deja que te pases del 50% de tus ingresos cuando agregas el pago de la casa, más pagos de carros, más tarjetas. Todo eso no puede pasar del 50%. Pero si hacemos un préstamo tradicional de FHA, podemos ir al 56.9 y aún calificamos. Okay. Algo así de sencillo, que puede ser que la casa que tú estabas comprando estás al máximo de tu calificación y son 300,000, ¿verdad? Entonces, pero si tú quieres aplicar para un préstamo de asistencia, puede ser que esos 300,000 ahora se conviertan en $250,000. Es la diferencia. Entonces, es acerca de la calificación. Eso es importante saberlo.
Y por eso es importante hablar primero con un profesional.
Sí.
No solo confiarse por lo que uno escucha en las redes sociales. Como digo, no es que la información que le trajeron a él fue falsa, sino que no aplicaba. No había contexto en la área.
No aplica para lo que ella quería lograr.
Exactamente.
Claro. Bueno, Roberto, y háblanos de eso entonces, porque los contaste, entonces, yo sé que, we're all over the place, man.
Yeah.
Pero entonces, decidiste Loan Officer, ya llevas, ¿cuántos años en esto?
Mira, desde 1999.
Wow. Wow.
Tengo, yo siempre digo, tengo la edad de mi hijo mayor haciendo préstamos.
Wow.
Ahorita él va a cumplir básicamente 24 años el próximo mes y yo en septiembre cumpliría los...
That's amazing.
Wow,
24
man.
años.
Bueno,
So,
entonces...
he knows a little bit.
Yeah, sabe un poco este tipo aquí, un tigre. Entonces, mira, Roberto, tú eres el branch manager y el líder de el grupo alemán, right? The Aleman team.
Correcto.
Ustedes tienen las oficinas principales, ¿son dónde?
En Frederick.
En Frederick, Maryland. Entonces, este es el tipo aquí, ¿me entiende? Roberto es el que le abre la puerta a nuestros clientes que tal vez no tienen ahorita una estadía, digamos, legal o aprobada, ¿verdad? Gente con Tax ID, ITIN, si se puede. Hemos logrado muchos casos ayudándole a los clientes que sí se puede, ¿me entiende? Roberto también les está hablando de programas de asistencia. A veces uno necesita una ayudita, ¿me entiende? Y Roberto tiene sus programas. Así que, Roberto, cuéntanos un poquito, ¿me entiende? Lo que son los programas que el Aleman Team y City Lending, ¿verdad? ¿Cuáles son las opciones que tienen ahorita? Porque ahorita, tú sabes, le voy a ser sincero, el que está viendo el mercado, comparándolo hace como estuvo hace 2, 3 años, lo ve caro, ¿me entiende? Pero la idea es que yo le digo al cliente, pero la renta sigue subiendo, la renta está igual, ¿me entiende? Entonces, uno hay que comparar, hay que hacer números, hay que hacer el análisis de si conviene o no conviene comprar, porque eso yo entiendo también, Roberto, no solo porque yo vendo casas, a todo el mundo le conviene comprar una casa, ¿me entiende? Cada situación es individual. Pero cuéntanos, Roberto, cómo, digamos, un cliente te contacta y cuáles opciones tienen ahorita, o, ¿me entiendes? Something you're really excited about, alguna noticia.
Claro. Voy a recalcar algo rapidito antes de empezar
Dale.
a hablar acerca de los programas en conjunto que tenemos.
Uh-huh.
Recuerden que si ustedes están rentando, la tasa de interés no importa, porque ahorita ustedes están pagando el 100% de tasa de interés.
Yes.
100%.
What we always say.
That's what we tell them, man.
Entonces, si vamos a comparar lo que se paga corrientemente cuando se renta un apartamento o una casa y están pagando el 100% de la tasa de interés versus una tasa de mercado donde estamos en el 7% por general, es mucho más valiosa, ¿verdad? Y yo creo que es importante recalcar también de cuando uno es dueño de una casa, hay muchas cosas que cambian. Va a cambiar tu forma de ver donde tú vives, porque es tuyo.
Claro.
Entonces, vas a buscar cómo arreglarla y ponerla más bonita, ¿verdad? Y eso es algo muy tradicional para nuestra comunidad. Número 2, estás pagando una mensualidad que a final de año, cuando tengas que hacer tus impuestos, te va a reembolsar una porción de lo que tú ya pagaste por parte de intereses e impuestos de la propiedad. Entonces, esa es otra ayuda. Aunque no la veamos al principio, cuando hacemos nuestros impuestos vemos ese beneficio. Y tercero, es de que si compramos ahora, compramos en los precios de hoy, entonces 3, 4, 5 años, cuando veamos que esa propiedad ha subido 40, 50, 60 mil dólares, esa es la ganancia. Eso es lo que ha subido la propiedad con los arreglitos que le hemos hecho. Okay. So, ganamos por la ganancia y ganamos por los pagos mensuales que hacemos porque vamos reduciendo lo que se debe, y ganamos una tercera vez cuando vamos a hacer los impuestos y recibimos un reembolso. Entonces, el ser dueño trae mucho, no solamente el simple hecho de ser dueño. Entonces, es importante recalcar y mantener eso en mente. ¿Quieres que hable acerca de los programas en inglés o en español?
Como usted quiera, como usted quiera.
Ok, vamos. Vamos a hacerlo en Spanglish. Entonces,
Okay, Spanglish, man.
Bueno, los programas de ayuda. Empecemos por los programas de ayuda. Programas de ayuda tenemos varios. Participamos en todos los programas de los condados, tanto como el de Frederick County, que tiene su propio programa donde si usted vive o usted trabaja en Frederick, ellos le dan hasta $10,000 para comprar la casa, siempre y cuando, de nuevo, vamos a dar regulaciones, ¿verdad?
Claro.
Usted gane X monto, porque si gana mucho tampoco califica, porque dicen, bueno, si usted está ganando bien, entonces...
¿Necesita ayuda?
No necesita ayuda. Vamos a ayudarle a alguien que sí de verdad lo necesita.
Que sí debe hacerlo.
Okay. Después venimos, tú sabes, tenemos uno en PG County, tenemos Montgomery County, y cada uno tiene su diferente versión. Lo importante saber ahí es que esos fondos se acaban y después vuelven a sacarlos el siguiente año. Entonces, eso es importante porque a veces los clientes dicen, no, pero yo escuché esto. Sí, quizás está disponible. Perfecto. Tenemos la opción de hacerlo, siempre y cuando califique. Tenemos el del Estado y ese nunca se acaba. Siempre hay dinero ahí.
MMP.
Ok, MMP correctamente. Pero, de nuevo, vamos a ir a esa cajita. Y en esa cajita el cliente tiene que entrar y si no entra, entonces desafortunadamente no califica. Okay. Y luego tenemos uno que es el más flexible de todos los programas que tenemos, que es un programa que se llama FHA 100, porque le financiamos el 100% por medio de un préstamo FHA. Okay. Y ese es súper flexible en cómo se hace, porque ninguno de los préstamos para asistencia para compradores por primera vez, y ahí está la clave, por primera vez, te dejan que tengas un cosigner. Okay. Por ejemplo, digamos que tu mamá o tu papá dijeran, hey, te voy a ayudar a comprar la casa porque ahorita tú no calificas todavía. MMP te dice no, porque no puede ser alguien que ya tenga casa. Y el condado te dice lo mismo. Este programa te deja que alguien venga y te ayude, siempre y cuando ganen lo suficiente para poder cubrir lo que la persona paga por su casa corriente y ayudarte a comprar. Okay. Entonces, eso es importante, porque ningún otro programa lo deja.
Yo no sabía eso, Roberto. Sí. Okay. Está que bueno, esa opción está... Porque especialmente ahorita que me entiende, la gente dice está más carito, a veces uno necesita una ayudita, ¿me entiende? Algo así. Y típicamente no se puede porque el que le quiere ayudar ya tiene casa.
Exactamente. Con solo que el cliente que le va a ayudar gane lo suficiente para cubrir los gastos de la casa de él y ayudar, que sea un beneficio, puede ir dentro del préstamo. Y aún se financia al 100%.
That's nice, man. Yeah. Sí, pero que te traiga alguien que de verdad va a ayudar, no que te traiga que está peor que ellos, ¿me entiendes?
Y muchas veces pasa eso.
I know, man. I'm just kidding.
Pero no, es cierto.
Pero ese está bien interesante. Yeah.
Es un buen programa. De nuevo, algo súper importante. Y voy a regresar a esto porque siempre es algo que los clientes me preguntan y yo creo que va a ser la misma pregunta que las personas que nos escuchan van a tener. ¿Por qué las tasas de interés en los préstamos de ayuda son más altas que en los préstamos regulares? Y es simple y sencillamente porque todas las ayudas, tarde o temprano, tienen que repagarse de alguna forma. Okay. Y la única forma de que esos programas puedan existir es por medio de las entidades que rigen estos programas. Tienen que poner tasas más altas para poder dar esa ayuda. Okay. Entonces, imagínate que, por ejemplo, el programa de Maryland. Vamos a regresar 10 años atrás. 10 años atrás el programa de Maryland no es lo que es ahora. Se acababa el dinero y tenemos que esperar a que hasta que el Estado le diera más dinero. Okay. Entonces ellos dijeron, no, tenemos que buscar otra forma para asegurarnos de siempre tener fondos para poder seguir ayudando a los clientes. Incrementaron tasas de interés, en vez de ser regalos, los hicieron préstamos. Y no tienes que pagar nada, básicamente, en los programas del Estado por ese dinero. Digamos que te prestan $10,000, te lo prestan a 0 intereses, pero el día que tú vendes tu casa, o el día que tú refinancias la casa porque ya tienes ganancia, hey, regresen esos $10,000 y ahora le puedo ayudar a alguien más. Entonces, es como un revolving door. De entra y sale el dinero, básicamente, pero y es así como ellos se mantienen fluidos para poder ayudar.
Claro.
Okay. Y todos los programas son así. De algún lado tiene que venir para poder dar la ayuda. Entonces, eso es importante saberlo. Y no todos vamos a calificar. Algunos no tenemos los puntajes necesarios. Otros tenemos muchas deudas. O sea, todo eso influye. Pero sí, los programas existen y están disponibles. Y como dijo René, el primer paso es tener esa conversación con alguien que sabe de los programas para que nosotros podamos guiarles, decirle, mira, no estás listo ahorita, pero si haces 1, 2, 3, 4, 5, 6, en 6 meses puedes estar listo. Claro. O en un año puedes estar listo. Es todo acerca de cómo prepararnos, porque esa es la clave, prepararnos. Yo siempre digo, not if, but when. Exactamente, porque todos podemos calificar siempre y cuando nos preparemos para hacer la calificación.
Yo sí digo, la gente va a trabajar todos los días. Sí, bueno, entonces se va a poder, digo yo. ¿Cuándo? No sé. Pero que se va a poder, se va a poder. ¿Me entiendes?
Exactamente.
Yeah, man.
Y vamos a hablar de un programa piloto que nació hace un poquito más de un año. Okay. Hace un poquito más de un año logramos crear un programa para clientes con Tax ID. Okay. Y este programa ha evolucionado un sinfín desde que empezó. Y ha evolucionado porque tuvimos una respuesta inmensa.
Sí, me imagino.
Una respuesta inmensa para los clientes con Tax ID. Por lo general, Los clientes de Tax ID siempre han tenido que poner un 15, un 20, un 25% de down payment más los gastos de cierre. Okay. Y estamos hablando que antes, ¿sabes? La gente que ha comprado con Tax ID ha puesto de $80 a $100,000 fácilmente para comprarse una casa de $300,000. Okay. Entonces, sale este programa el año pasado, a finales del 2021. Okay. Y lo empezamos a formar, lo empezamos a forjar. Y empezamos el 2022 con este programa. Okay. Donde solamente le pedimos 3,5% a los clientes con Tax ID. Y evolucionamos el programa aún más cuando no solo lo aplicamos para Tax ID, para cualquier cliente que quisiera intentar hacer parte del programa, especialmente la gente que trabaja por su propia cuenta. Porque sabemos que ellos no van a declarar lo que ganan. Okay. Entonces, ¿cómo lo formamos? Lo formamos diciendo, ok, vamos a ver 3 meses de los estados de cuenta bancarios para ver el influjo de ingresos. Lo que entra a las cuentas de banco en esos 3 meses y lo que sale. Y basado en eso vamos a hacer lo que se llama un profit and loss o un estado de entradas y salidas. Y el ingreso neto que sale de ahí es el que vamos a utilizar para su calificación. Entonces, he tenido clientes que me traen los taxes y yo los taxes y dicen que ganaron $250,000. Quitaron todas las deducciones, hasta si llevaron a la mamá y a la abuela a comer, lo pusieron ahí de deducción y se quedaron con $20,000 de ganancia. Y el ingreso de ellos son $20,000.
What are you gonna buy with that?
Bueno, entonces, este programa lo que hace es, probablemente siguen ganando los $250,000, ¿verdad? Y están entrando entre $20 y $25,000 a la cuenta mensuales. Okay. Entonces, cuando sacamos los 3 meses, vemos que el ingreso de él probablemente está entre 15 y 20 netos, porque lo demás son gastos, ¿verdad? Ahora que pueden calificar utilizando ese ingreso. Entonces, lo expandimos de esa forma para que los clientes que son self-employed y no declaran todo puedan venir y hacer la compra, ¿verdad? Y dicen, ¿cuál es el catch? Okay, porque siempre pero algo tiene que ver malo. Y no es necesariamente malo, pero diferente. Okay. Para nosotros poder crear este programa que es respaldado por FHA, okay, tenemos que tener una entidad. Y esta entidad lo que hace es que nosotros como banco le vamos a prestar a la entidad el préstamo. Tú encontraste una casa, la casa vale $300,000, perfecto. Nos das el contrato, ese contrato ahora lo asignamos a la entidad. Y la entidad viene, hace el préstamo, nosotros le otorgamos el préstamo a la entidad y la entidad te da el préstamo a ti. Okay. Hay 2 tipos de títulos, el título legal y el título de ganancia en este préstamo. El título legal lo mantiene la entidad y el título de ganancia lo tiene el cliente. Okay. Cuando se unen es un título normal. Okay. Pero acá lo separamos para que la entidad te puede ayudar a comprar con el 3,5% de down payment. Okay. Entonces, al tener eso, te requiere que 3 años mínimo te mantengas dentro del programa. Después de eso, tú puedes refinanciar, tú puedes vender lo que te guste sin ninguna penalidad. Okay. Y el préstamo es hecho a 40 años para poder asimilar lo que el pago de 30 sería. ¿Y por qué lo hacemos de esa forma? Es para ponerte listo para cuando en el futuro tú hagas un cambio. Así refinanciando a un préstamo tradicional de 30 años, el pago no te cambia mucho. Es por eso que se hace así.
That's good.
Entonces, es diferente.
Ese programa, Roberto, en mi opinión, yo llevo años en esto, ¿verdad? No estoy desde el 99, creo que tenía como, I was like 18, 17 at that time. Pero ya llevo mis 7, 8 años en esto, ¿verdad? Y los primeros 2 años, los primeros 3 años, toda la gente, yo llamé a bancos en California, llamé a bancos en Texas, because people are telling me, hey, allá sí se puede con Tax ID, solo 5%. Y yo digo, wow, porque la cantidad de gente que, René, yo quiero comprar casa, pero solo Tax ID. ¿Me entiendes? Pero entonces a ustedes están dando una oportunidad, bárbara esa oportunidad, amigo, para la persona que tiene Tax ID y tal vez, ¿me entiendes?, está pagando mucho en renta, ¿me entiendes? Es un paso, como te digo, es un paso para ser dueño. Sí, claro, hay reglamentos y todo eso, pero si usted compra algo o digamos, vas a invertir en algo, vas a estar ahí 3 años, brother. Solo que haya un cambio drástico en la vida. Y a ese momento creo que tu caso va a ser el mínimo de la preocupación que vas a tener, ¿verdad? Un punto muy, muy importante. A mí me llegan muchas llamadas de parejas o, digamos, de personas que quieren que quieren comprar, ¿verdad? Pero tienen el problemita que uno tiene social y el otro tiene Tax ID. ¿Me entiendes?
Yeah.
Entonces, no, ¿me entiendes? Siempre es así, ¿verdad? Ella tiene social, él no, whatever, right? Vice versa. En este programa, si no me equivoco, dejan que se combinen esas personas.
Sí, y por lo tradicional es algo que no se puede hacer. La mayoría de los préstamos, incluso los de 15 y 20%, no te permiten que una persona con seguro social vaya con la persona de Tax ID. Okay. Este programa sí. Este programa
Incredible opportunity, man.
Te deja que se mezclen. Y, por ejemplo, muchas veces lo que pasa también es de que la esposa o el esposo son los que tienen el crédito. Entonces, juntamos los créditos. Agregamos al que no tiene a la persona con la que están casadas y ahora es una cuenta junta. Y ahora podemos utilizar ese crédito que no tenía.
El que no tenía nada, ¿verdad?
Para poder crear básicamente una transacción. Entonces, hay formas de juntarlos ahora. El aceite y el agua, básicamente.
Sí, basically. No, porque eso es único. De que yo sepa es único. Yo no conozco ningún otro programa o ninguna opción donde te deje combinar un social con un Tax ID para aplicar para un préstamo de hipoteca, ¿verdad?
Sí, correcto. Es diferente.
Yeah,
we had to turn down a lot of people.
Yeah, I mean,
because they're like,
no había esa
like you
opción.
said, my wife has a social, but I got Tax ID. Sorry, we can't.
Yeah,
or we even have my wife is social, she's W2'd, I'm self-employed.
1099 now, man.
Yeah. So the combination, and it's okay.
Sí, eso es increíble.
That's amazing.
Yeah. Entonces, un punto muy clave que hizo Roberto anteriormente, entiendan cómo ganan el dinero. Ok, entonces, si usted es una persona que, digamos, genera buenos ingresos, ¿verdad? Pero usted sabe, no le quiere pagar al tío Sam, ¿verdad? Entonces, cuando usted va con su contador, le dice, mire, póngame ahí que gasté en esto, me corto el pelo cada 2 días, whatever it is, right? Right? Entonces, en este programa, lo que también es, en mi opinión, es único o es una buena oportunidad, es que no se van a basar solamente en los taxes. Claro, van a revisar los impuestos para verificar que usted está haciendo esta cantidad y le está diciendo al tío Sam, ¿verdad? Pero lo increíble de esto, digamos, usted tiene a alguien que trabaja W2, como usted dijo. Esa persona ya lo que ganó es lo que ganó. Eso quedó cementado ya, olvídese, ya reportado, eso ya no se puede cambiar. Usted, ¿me entiende? Que es 1099 y usted básicamente le entra y usted paga los impuestos a final del año. Estas personas tienen ventaja, Carlos, porque no se van a basar solo en los impuestos, se van a basar en los estados bancarios. Y ahí uno, en mi opinión, usted tiene control de sus estados bancarios, ¿verdad? Cuánto dinero entra y cuánto dinero sale. Yeah. Entonces, en ese aspecto, para mí, el programa es una excelente oportunidad para las personas que tal vez no les queda mucho después de que hacen los impuestos y después de los gastos que declaran, no les queda bastante. Porque esa es la respuesta que te van a dar típicamente. Mire, solo le quedaron 35,000. Lo vamos a aprobar para un condominio de 125.
Si es que
eso. Y dice la gente, wow, pero yo genero tanto. Yo entiendo. Mucho dinero pasa por sus manos. Yo entiendo, ¿me entiende? Pero la manera que usted le está diciendo al tío Sam en los taxes, le quedan 35,000. Entonces, por eso es bonito este programa, porque no se va a basar solo en los taxes, lo van a ver, pero se van a basar más en cómo le entra y le sale el dinero a su cuenta de negocio, me imagino, ¿verdad?
Exactamente, y a veces nos toca ver las cuentas personales porque los clientes no tienen cuentas de negocio, lo cual está bien, simplemente tenemos que diferenciar qué es lo que es de negocio y qué es lo que no es. Entonces, y este programa es muy flexible porque muchas de las personas a veces me dicen, no, es que a mí me da miedo meter todo mi dinero al banco. Entonces digo, no, pues estos 3, 4, 5 meses que vamos a estar en el proceso, meta todo el dinero, porque tenemos que ver que usted tiene la habilidad de generar el dinero. ¿Me entiendes? No, y es eso, porque este programa es cash flow. Entonces, si entra y sale, está bien, pero tenemos que ver que se mantenga un poco de dinero ahí en la cuenta. O sea, no puede decirme, gané 13,000 y se me fueron 14. Entonces estamos mal, ¿verdad? Tenemos que tener un buen influjo de dinero constante, pero no negativo. Tiene que ser positivo. Entonces, porque siempre vamos a ver lo positivo.
Sí. Qué bueno. Bueno, Roberto, te hemos tenido ya un buen tiempito. No te queremos quitar más de tiempo. Hey, te agradecemos que hayas venido. Thank you, man. Appreciate it very much. And busquen a Roberto, man, tipo profesional que sabe mucho de estas cosas y les puede asesorar, porque recuerde, como decimos, es un proceso, no es un evento, ¿verdad? Así que no sé, Roberto, ¿con quién los quieres dejar? ¿Con algo, alguna noticia o qué me dices?
Claro, les voy a dejar con un pensamiento. rapidito. El programa para los clientes con Tax ID no es un programa para quedarse ahí por los 40 años. Le estamos abriendo la puerta. Si usted decide pasar, perfecto. Porque el momento que usted decida pasar, va a tener su casa.
Sí.
Yeah.
Okay. Entonces, es dar el primer paso. Y desmiéntase, básicamente. Si usted no sabe si puede, o si a usted le han dicho que no puede, siéntese con nosotros. Conversemos, veamos sus posibilidades. Y como le dije, no es si puede, sino cuándo. Porque es eso. Es cuándo usted va a estar listo para hacer ese primer paso.
Yeah.
Nice.
Amazing.
Carlitos.
Talk to Roberto, man. Like, you gotta, lo que él dice, es lo que para muchas personas. Es la duda, ¿verdad?
Yeah.
Pero ¿cómo vas a salir de una duda si no hablas con un profesional? No te dejes aconsejar por tu tío, tu tía, tu hermano, si ellos no saben, ¿me entiendes? Habla con alguien que sepa y pues Roberto es esa persona para nosotros.
Yeah, man.
And we're gonna leave, vamos a dejar toda su información de Roberto, y si Roberto quieres compartir tus redes sociales con la gente para que te encuentren, te den un follow o te manden un mensaje directo, you know, puedes decirlo, ahí está la cámara o just say it, you know.
En aquella, mira, Roberto.
Yeah.
Listo, perfecto. Sí, me pueden encontrar en Facebook, en Instagram, como el equipo alemán o Team Roberto Aleman. Entonces, búsquenme, follow me, like me.
Mándale un mensaje, dígale, hey, I listened to you guys' podcast and that's how I'm here.
Yeah, man.
You know, all right. Well, this was amazing having you. You are a wealth of knowledge, and your experience speaks for itself.
Yeah,
and his business card, I love his business card. If you guys can't, you guys won't be able to see it, but it's like it looks like a Avengers logo, and it's amazing. I love it. You guys got to check this out.
Now, the thing that was crazy, he says, I know, that was the point.
That's the point. No, I get it. Yeah. And I caught on to it. I was like, yo, this looks like you know. And I'm not going to lie, he gives off like Tony Stark vibes too. Like, for real. Yeah, it's amazing. Well, Roberto, it was amazing having you. Hopefully it's not the last time. Yeah, and I guess that's it for today's episode.
That's it, man. Catch you guys on the next one.
Yeah,
man.
We'll catch you guys in the next episode.